Two big monetary policy meetings have taken place recently. Let's find out their significance to the global markets with our chief equity strategist and economist, John Blank. John, one meeting was with our Fed. What happened there?
Well, the Fed stayed dovish, and Powell made a case of using, the equity risk premium over the bond rates to explain the overvaluation. I do that myself. So he's right. I support him. That's the basic idea here is if you look at bonds and stocks, you have to look at the amount of cash that you can basically objectively earn on a stock versus a bond. And since bonds are paying so little and stocks are still paying more, the trade is still to buy stocks. And that's what Powell laid out. And that the fact that Powell laid it out is also bullish.
So the significance of that outcome is more bullishness for the market?
Yep, that's more bullish for the market because me laying it out, private investor, private economist, I've done that for years. But when Powell lays that out and he's in charge of macroeconomic decisions for the United States, that's bullish.
All right, the second meeting is with the Bank of England, and we're still awaiting the outcome of that meeting as we speak here today. But might that outcome impact the Brexit deal?
Well, Brexit is going to happen. We got another 2 weeks to kick the can at Brexit. I expect exactly what's going to happen. They'll just kick the can some more. So my thinking is the Bank of England will get themselves out of the way, and the Brexit vote won't happen in time for the Bank of England to rule. So the Bank of England is going to be kind of stuck in front of a decision they'd rather know about. So again, that's dovish because they're not going to raise anything in advance of a Brexit possibility, and that's the basic reality here.
Other interesting happenings recently include Tesla joining the S&P 500 index. How do you feel about that?
That may be the most overvalued stock in the planet. It's 1% of the S&P 500 by market cap. They're not going to, it's not going to be like it personally has a huge market cap, but it's not going to be that weighted. But personally, the fact they let it in because it had 4 quarters of strong earnings when those earnings were driven by regulatory tax credits, not a business model. This may be an epic fail on the part of the S&P 500 Index Committee. I'm not a buyer. I don't think, you should be. Tesla's a momentum stock, and it's going to blow up here shortly.
Looks like the current White House administration isn't quite done yet with China. What's the story there?
That's a really good question, Terry. I guess it's window dressing in advance of the Biden administration. But I do think Pompeo is sharper than people are giving him credit for. And there may be some substance to his ability to hand off his decision to the next administration. Pure speculation on my part. But one way or the other, it doesn't really matter because Biden's coming in and there's going to be a new State Department, or frankly, a State Department after 4 years not having one.
The three major indexes, stock indexes, are up sharply for the year as we speak here. Do you think we're going to get that Santa Claus rally in stocks before December's over?
Yeah, Terry, it's crazy to see stocks drifting higher, but with, more stimulus coming, vaccines distribution ramping, and the Fed and all these central banks staying out of the way, it's just higher is the path. The trend is your friend, and that's what's going on. Tough to see anything but more overvaluations from an overvalued stock market. That's crazy, but that's what I think.
And looking ahead a little bit into the new year, you expect more bullishness in the market for 2021 at the open? What about the economy?
Yeah, I do. I think you got to be bullish on the stock market through mid-2021. And then you can get a sell the news event once all the vaccines are distributed and everything's out of the way. But it's very tough to not be bullish right now.
On the economy as well?
Right. Yeah. Well, the economy is a different animal. The problem here is if there's, people don't want to take the vaccine, this causes some hang up, or it does, people somehow find out there's a side effect that nobody knows about because they rush through some of these authorizations. Those are the bear cases on the economy. But unless that happens, the economy is going to reopen and people are going to go, mobility stocks will get to play, and the market's betting on those mobility stocks now.
Stocks on your radar, speaking of stocks, include Hologic, Packaging Corp of America, and Micron Technology.
Yeah, Hologic is a medical product stock. You should know about it. It comes up time and again on my rating screens. Ticker HOLX is a large cap stock, but it's an interesting one, and I like healthcare plays in these environments, particularly ones. This might sound strange, but ones away from the vaccine story because they're not overvalued if you're trying to get in now. Packaging Corporate America, ticker PKG, classic internet play. You gotta like this stock, one way or the other, post-vaccine or not. PKG seems to be a good one, but again, buy it on a pullback. You're not the first guy to figure this out. Third one, Micron Technology, big run on Micron. The stock's up in the 70s now. It might be on a breakout run like AMD. This is a classic story where high might go higher. So as a trading stock, you gotta like Micron Technologies, ticker MU. However, once this thing rolls over and the shorts get a hold of it, get out of the way.
That wraps up this year with our chief equity strategist and economist, John Blank. John and I both want to wish our listeners a very merry holiday season and prosperous new year. With John, I'm Terry Ruffalo.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.